After keeping rates unchanged for 9 straight months, the Fed has now cut interest rates 2 months in a row. Now, third quarter earnings season has crushed expectations so far, with over 80% of S&P 500 companies beating estimates. And we got some more beats yesterday from Mag 7 names, Google and Microsoft, yet Meta missed on EPS by over $5 a share. Joining me on this Thursday morning to weigh in is Gabby Verospi, who's the CEO and founder of Latino Wall Street. Gabby, good morning. Thank you so much for joining us. So today is the day after the two-day Fed meeting, as well as some key tech earnings from Mag 7 names. So let's start out with the Fed first. What was your reaction to the 25 basis point cut, but more importantly to Powell's presser?
Yes, good morning, Remy. So what we saw yesterday was very interesting and I have to say quite typical of what we've been seeing with the Federal Reserve. So what I mean by that is we all knew we were going to cut 25 basis points. That was, if you went on the Fed watch, the probability was over 95%. So that was almost guaranteed. I don't think anyone was surprised by that. What tends to always give us a surprise was Jerome Powell's speech. And what he said, that the December cut was not confirmed, I think that's what spooked the markets. The markets did not like something that we were basically counting on, right? Because if you go on the Fed watch, before this meeting, it was the December rate cut was over 90% probability as well as the October one. And after he said that, it went down more than 20% of probability. So, of course, the markets are not going to like this uncertainty. Also, it's known there's a division now in the Federal Reserve board members that many don't agree about the December cut. So learning that there's a division between the leaders was also not very good for the markets. So I think moving forward, the markets are always going to be forward looking, right? It's not so much reacting to what is the decision for the day, but it's more so moving forward in the next few months, in the next year. That's what we try to find out during the press conference. What can we expect? And since we don't have a clear path now because of Powell's words, that of course is going to bring a lot of volatility.
Yeah, it was interesting to watch not just equity markets, but also the bond markets as Powell started speaking yesterday. And of course, we have been paying attention to earnings this morning. Last week, we talked about Tesla, and now let's focus on some other Mag 7 names, including Alphabet, Meta, and Microsoft. So what were the key takeaways from yesterday's earnings after the closing bell?
Yeah, I think for me, the key takeaways were that there's way too much spending going on in AI, specifically in data centers. I mean, look, we know they've been very aggressive, spending hundreds of billions of dollars every quarter between all of them, but it's starting to affect the stock, which is interesting because you would think, this expansion, innovation, huge investments would be something that would actually help. But at the end of the day, it's about the bottom line and earnings focused on revenue and the bottom line. And we saw, for example, with Meta and Microsoft, that the forecast of increased spending, it's not helping the stock react in a good way. It's not so much the revenue, we know the revenue's there, but definitely it's again, right, earnings are forward looking, very similar than the Fed decision. It's what is coming next. It's not so much how do we do in the last quarter. Yes, that's important for the fundamentals, but investors care more about where are we going next. I think Google is the one that's shining very bright. It surged over 7% after reporting stronger than expected earnings. The AI revolution is here. We just have to be careful with the estimated that we're going to be spending with these big companies because we don't want that to affect the bottom line.
And Gabby, before I let you go, let's talk about stock milestones. So this week we saw the Dow, Nasdaq, S&P 500 hit new record highs. And when we're talking about some of the big tech names, Apple hitting 4 trillion, Nvidia eyeing that $5 trillion level. So as we head into year end, are there any price targets or milestones that you're paying attention to?
Well, I have been paying attention to my price target of Nvidia to hit 200, and I had been saying for a long time in my investor community in Latino Wall Street that I don't know why Nvidia is not at the 200 price point yet, right? And it reached it in the last day, so in the last couple days. So I think this is just the beginning. There seems to be this psychological thing that happens that when a stock hits 100 for the first time or 200 for the first time, it tends to go up even more quickly. It's almost like we've had this like breakthrough of like a new barrier. It's broken and then, we go up more. So I think with Nvidia, for example, we will continue to see that upward trend, and every dip will be an opportunity. And with the S&P 500, I think that breakthrough level is 7,000. Once we break the 7,000, that we've gotten very, very close to over 6,900. I think that will be that key level, that psychological level that could potentially bring us a lot higher too if everything happens according to plan. We need agreements with China, right? It's not confirmed yet. It looks like we're heading the right direction, but that's crucial. This holiday season cannot disappoint, and we need more positive earnings than negative, because we know not every company is going to surprise us in a good way with their earnings, but we at least need most of the S&P 500 to do well, and then I think that will continue this bullish upward trend, at least for the end of this year. For next year, we'll see.
Okay, Gabby, well, thank you so much for joining us the day after the Fed, as well as after some key tech earnings.